Hey everyone, Coldwater FX here from Phantom Trading, and today I'm just going to be going over a trade that I took on March 30th on GBP USD. I took this trade, I believe, during New York session. We're going to break it down here with bar replay, and I think it ran for about 8.6R, and I ended up managing it pretty well because price actually reversed. This was basically the last push in this bearish leg that I was able to catch intraday. Obviously, being an intraday trader, I'm looking for any opportunity to get in and capture the volatility during New York session. Currently, I'm not trading London, but it is something I'm eventually going to bring back. But being located in Canada in the Eastern Standard Time Zone, it's not easy to wake up at 2 a.m. in the morning and live a normal life. So, still kind of considering it, but New York has been offering a ton of awesome opportunities on EU and GU lately, so I've been trading that, and it's been really good. So I guess let's start off with structure here. I have most of it marked out already. I just wanted to show kind of what price was doing before it got to this point intraday. And this is always important because you want to have an idea of what price is doing and where you expect it to go. With two things. I mean, we're looking at number one, expectational order flow, and number two, we're looking at what sweeps of liquidity are kind of going on and where the traps are. Basically, we want to trade away from any trap. And I'll explain that a little bit more as we get deeper into the trade. But in the meantime, these are our 4-hour breaks of structure down. I'll just mark this out on the side here so that you guys have a bit of a visual idea of what this is. As you can see, we kind of came from this range, right? It's a larger overall range. And we pretty much break this low and this low as price pushes down. There's our break of structure, right? So what are we expecting next? We're expecting that price is inevitably going to push back up. We don't know how high within the previous leg, but it's going to push up, usually to either an area of supply up here, or maybe there's an area of supply here, right? In this case, it's this one. So we see price react to that on the 4-hour and 1-hour, and then our expectation is we're going to break this next low, which is this low here, right? Now, this doesn't actually happen because, again, price pushes up from here. It's because we react to a daily order block. So I will quickly mention, this is important. You got to pay attention to the daily, even if it's just looking at it every other day. So you have, again, an idea of what the overall trend is, which is pretty bullish. So technically, this is counter to the higher time frame, daily trend, right? We're in a pretty much a complex pullback, right? This is our high, our low, and this is our high. This is our pullback, and we're expecting the daily to do something like this and break this next high. But again, because we're intraday traders, we can look a little bit deeper into the time frames. I usually like using the 4-hour a lot. This is one of my core higher time frame periods to play with. I'll look for trades off of basically any 4-hour zone of supply or demand, right? Demand being a bullish area and supply being a bearish one. So moving on to the 1-hour, obviously the 4-hour and 1-hour breaks of structure are pretty prominent. These are really just swing lows that we're taking up. So when price does that, it tells me there's a ton of momentum. Somebody's behind this move, so let's potentially investigate it. We'll set an alert here, and we'll wait for price to come back, ping it, and if we're not around for that, or we miss that trade, that's fine. Do your ASRs, backtest recent price action, whatever you need to do to try and learn price action and get an idea of how it's unfolding, right? But again, so we're looking at this because we want to know why we're getting into our short here, right? So this is pretty much the setup for it overall. I'm always looking at price again, kind of previous to where current price action is, because I want to know if I can hold it or not, and if it's going to be a high probability trade if I have higher time frame structure and an expectational order flow behind me, right? So on the 1-hour, you can see here we actually tap into a zone of supply, which is really awesome, and we get a really nice reaction off of it. And then price starts to break down further, right? We actually get a 1-hour break of structure here, and if I push over to the 15 minute, we actually break structure here as well, right? This is all from this area here of supply, the 1 hour, right? So there's our breaker structure. Again, on the 1 hour, we close below this area here. Once we get to this candle here on March the 30th at 2 in the morning Eastern Standard Time. So that's our closure below. That's what I consider a breaker structure, right? Now, if we analyze price on a little bit more of an intraday perspective, we see here we have Asia's session, and we have tons of breaks of structure on the 15-minute, both substructurally and pure structure in and of itself. So see that price does that. And if we actually go to the 5-minute, there's a few things I kind of want to break down here because there's even more confluence behind this trade, and this is really what told me to get into this. Right, I'm always using my analysis as a guide to get me in and out of trades. Right, so this is just totally bearish from a medium to lower time frame perspective. Right, again, I know we're obviously bullish on the daily, but on the 4 hour and hourly, like, we are so bearish that I'm willing to take a trade that's counter to the daily. And if I were to only take trades that are with the daily trend, I'm not going to be trading half the time, right? Because again, price is so bullish right now. I wouldn't have taken this short. I wouldn't have taken this one, right? So you have to sort of pick apart price action. And really, I use the daily again, just to go back to this, really as a guide. If I see that we're tapping into a daily order block or area of supply or demand like this, then I'm going to consider it, right? But it's not going to stop me from taking shorts either, even though we're pretty low in this overall leg down, right? So let's go back to the 5-minute here. We just look from, again, an intraday perspective. We have this here. So basically have Asia's range. We've built liquidity, trendline liquidity, and we've actually swept it. So that to me is another like bull trap, right? We swept it and then we sort of break down. So anybody who is sort of trading, just pure trend lines, they're maybe taking longs from here, and they're getting basically trapped into that long and then taken out, right? So that's a pretty nice confluence. We have a trap, and what does that trap do? It actually taps into a 5-minute zone of supply right here. So when a sweep of liquidity taps into a zone like this and mitigates something, that is a huge confluence for me. And this happens multiple times. We have that happen, and then we have price kind of break down, create another zone of supply on the 5-minute here, comes, taps, mitigates into it, pushes down. We actually build some liquidity here, right? Oops, that's the wrong tool. And then we sweep that liquidity. So I'll show you this on the 1 minute, so it's a little bit more clear. We sweep this liquidity, we tap into this zone here, the 5-minute zone that's sitting above it, right? And we're not picking this one because we've already mitigated it. And we push down further, right? Now it's kind of interesting. Technically, this trade, this is a fantastic trade for London if you were able to catch this, and I know a couple team members did. But this trade technically expires because it comes and kind of sweeps this high, right? So depending on how much buffer you had on it, you might have got tapped out, especially if you took it, or if you set it to break even your order and didn't take any partials. You got to be kind of careful. This is why I don't like typically holding my trades for longer than the session. I just like to get quick 10-hour trades in and out, compound my account, right? That's just my style of trading, but I know some of you are swing traders. It really depends. But if you're trying to trade like me intraday, I'm only looking for I wouldn't say they're scalps, but just quick intraday trades. So again, price taps into that, continues to sort of push down. Again, obviously we have our breaks of substructure here on the 5-minute, and I would even say this is like full-on structure on the 5-minute. But these are substructure on the 15, as you'll see here, right? If we kind of consider this all one leg. But either way, those breaks of structure are great. This one's really nice too, because it's a swing low, right? Like, this is a pretty important low, and if this gets taken out, like, we're bearish. So again, we pretty much broke structure down, and price is now pushing back up into this 15-minute zone. And if I actually mark out the equilibrium, you can see that it technically mitigates that. But if I drop now to the 5-minute, you'll see that we actually have a 5-minute area of supply sitting right here. So, you know, for some of you, you might be thinking, oh, you know what, like maybe I missed the trade, price is tapped into it, what am I going to do, right? The way that I typically look at things, and you know, this is why I always look to take the equilibrium of the 5-minute, price typically taps into it. It doesn't always happen. Like, yeah, you can take it as a straight 5-minute area of supply, or you can go on the 1-minute and try to like figure out, you know, where it's going to tap into. In this case, you know, I see this all the time in the community where people are like, okay, you know what, let's take it off of it. And it's not to say that it's not correct, but you never really know, right? Trades expire pretty quickly sometimes, especially this one. Price actually does come up higher, and that's where I got my entry. So I'll show you how that happens next, but this is why I always advocate staying kind of on the 5-minute for picking your entries and just taking the EQ of it. This is mostly for you newer traders out there. For those of you that have that type of experience and you know you're able to sort through all of these 1-minute zones, I mean that's fine. But you know, even if you were to add this as a sort of like filter for your trades, you know, looking at the 5-minute and just looking at the equilibrium and looking for only trades, you know, in the premium of a supply zone or in the discount of a demand zone, then you're gonna keep yourself out of a lot of trades that either expire quickly or you know fail altogether, right? Because again, you know, we've built liquidity here, and what am I looking for when I see liquidity? I'm looking for a sweep, right? I'm expecting that these equal highs are going to get swept. So moving back to the 15-minute here, there's actually a couple things I want to mention, and you know, this is the 5-minute. This is where, you know, price action can kind of get misleading. We do technically have liquidity that's built here, trendline liquidity, and that gets swept into this. And you know what? There is honestly a nice, like, what I would say there's maybe a nice, you know, if we just took it straight off the 5-minute or the equilibrium of the 15-minute, there's a nice like 2 to maybe like 5 hour trade that happens here, right? But again, we're not really in the business of taking like tiny trades like that. Yeah, it's great. If you can hit these with a high strike rate, you know what, go for it. But again, I'm looking for the equilibrium to get tapped into of this 5-minute supply zone up here. So going back to the 5-minute, kind of saw that price, you know, was messing around. It technically didn't break this low because it didn't close below it, but it did break substructural lows. And you'll see on the 1-minute, technically these are breaks of structure too, right? But overall, I mean, we're still bearish based on, you know, all the analysis that I did prior. So what I did was I set my order right at the 50% of this 5-minute, which again is nested in this 15-minute zone of supply. So if we slap on an order like this, you can see here we're getting a pretty nice order set. So I believe what I took here, let me just check my trade here, my trade journal. Yeah, what I took here was about a 3-pip stop loss. So you'll see that obviously price taps into it. And again, we're sweeping this liquidity here, right? Let's not forget that. This is one of those scenarios where you're kind of getting faked out, right? So I'm always looking and trying to think a couple steps ahead and trying to get into the minds of, you know, the market makers, the institutions who are pushing price around, trying to figure out, you know, the proper entry. Now, one other caveat I kind of wanted to mention here, you know, again, I don't want to discourage you guys from going on the 1-minute if you're a new trader. There is a time and place for it. It's really just the entries I'm talking about. Because here's the thing, I use the 1-minute for analysis all the time. I don't necessarily use it for breaks of structure unless I'm looking for multiple breaks of structure, but I'm going to show you something that's pretty cool here. So if you'll notice on the 1-minute, we actually have liquidity here that's built, right? And then we actually tap into something on the left. What do you know? It's a 1-minute zone of supply. So let's mark that up. That to me is a further confluence that, you know, price is going to continue to push down lower. And you know what taps into that? Obviously it's this. You know, some of you may see this as liquidity. It definitely is. So, you're not misinterpreting it, but I'm trying to look at the overall picture, right? I don't want to get too caught up in the details, which is why, again, I only look at the 1 minute I'll take entries on the 1 minute like once in a while. It's pretty rare, but again, I like taking the 5 minute equilibrium or 50%, right? Overall, again, on the 1 minute, I'm looking to analyze for liquidity. I'm looking for sweeps of liquidity to happen, right? So because this swept liquidity into something, this is technically our initiation here. This would be our initiation, right? This would be our reaction, right? So this is pre-liquidity to our reaction. So pre-reaction liquidity, we push down, break structure. That's awesome. We build all sorts of liquidity here, post-reaction, right? So there is my liquidity here. And really, I would say this is a confirmation entry. I know some of you think of confirmation entries as, it being recent price action, where we kind of have something like this. And those are good to take too, but they don't always happen, right? So again, you have to look at the bigger picture and try to zoom out more. Everything is a lot more subtle on the 5 minute, which is why, again, I like to look at liquidity on all time frames, but especially on the 1 minute, right? Because it kind of tells us and helps us break down the flow of orders and price action, right? Basically the order flow. So I get tapped into that. Price reacts. We'll actually look at this on the 1 minute. And by this point, I'm already up like pretty much 5 hours. The first thing that I do in any trade when it comes to management is I'm setting a partial take profit at 5 hours for 20%. And what that does is it essentially covers my downside risk. So the minute that this gets tapped, not only do I take off a fifth of my position size, I have this set through magic keys, and there's other tools out there like position size calculator. You can find it in the resources channel of the community in Photom. But not only do I basically cover my risk by taking off a fifth of my overall order, but I'm actually taking off a fifth of my risk as well, right? Because I'm closing a fifth of my overall position. So if I'm risking, say, $500, 0.5% of a $100,000 account, that would be an FTMO as an example, or any prop firm that offers 100,000 US. I'm technically covering, by closing my position, 1/5 of it, I'm covering about $100 or 20% of my risk, and then I'm taking that 5R, right? 20% of 5R. So I'm covering risk and making a tiny bit of profit straight away, right? And what that allows me to do is leave my stop loss completely open. So rather than setting a break even right here, or a little bit lower to cover commission, technically I actually cover my commissions by doing this too, right? It really depends on the size of the account that you're trading. Obviously, the larger the account, the bigger your commissions are going to be. But a lot of the time, I know a lot of you guys like to manage by doing break evens, which I'm not against doing, and I do it sometimes for more aggressive trades. But in a trade like this, where I have all this mid time frame and higher time frame, which is pretty much the 4-hour confluence of it being bearish, I'm happy to just manage it in this way. So here, I'm just gonna put this like little stop loss here because again, this is how you would manage it if you were doing just a pure break even. But anyways, I don't always like doing this again because price comes back, which it does sometimes, comes to like mitigate something here, and then continues to push down. You're gonna get tapped out, and you're gonna miss out on a lot of profit, right? So price pushes down, and from this point, I'm pretty much looking to start taking profits at certain zones, right? So if I look at the 15 minute, I'm always thinking of like potential targets, right? Obviously, I want to try and target this absolute low here, but what I did was I actually just started picking out swing lows on the 15 minute. So I had this one here that I had marked up. We'll mark that as a partial T, where I believe I took out, if I look at my trade history here, I think I took out 20% here. And then I noticed that price started to consolidate. So I'll actually show you guys this. And we're heading toward kind of, again, we're within this like daily order block, right? So I'm kind of weary about like holding it. I took, yeah, 20% here. Price continued to push down, then it started pushing up, pulling back, as you'll see here. And I started to, oh, actually, sorry, yeah, price actually pushes down lower. I forgot that it broke this structural point. So yeah, I took, I would say about 20% here, another 20% of my position, right, at about, whatever, 7.6R. And then price continued to push down. And this is where price started pulling back and consolidating, tapping into our daily zone. So if I look on the 5-minute, that's a pretty like deep pullback, right? So again, the way that I managed it, it was pretty discretionary in the sense that, I was just hitting partial TP on my magic keys, closing out 20% at a time. Because really I just want to pay myself, right? Once, I hit a trade that's running like about, 10R or whatever, then, I'm pretty happy with it. And again, I'm just trying to compound my account, right? I'm not looking to take huge 50R trades and, take 1,000 losses in my attempt to hit that one banging trade. You know what I mean? So, let me just mark out all these partial take profits so that you get an idea of, where I did it. I'm just going based off of like my trade journal here so you get an idea. So I took another 20% off here. I think because we tapped into another 15-minute sort of swing low here, or demand zone, if you want to call it that. So I'll just mark that out really quick. This is a pretty good case study on how to manage something, I think. And you have to consider that we are in a daily, or we're approaching a daily zone here, right? And again, I think this actually holds. It never actually comes lower. We're bullish on the daily, so you got to be aware again of that high time frame. Always be aware of it, and always be aware of at least the 4-hour, because that's a super important time frame too, especially with the way that we trade. So moving back to the 5-minute, took another, I believe, 20% here. Price sort of consolidates, starts pushing up pretty aggressively. I get a little bit nervous, and then this is where I started really like taking off, more parts of my trade, right, or more size in my trade. So I then took off another 40% here, and then another 20% in and around here. So overall, if we do it like roughly like this is why I only took about 8.9 R on this trade, because again I was taking partials at different zones here, right? So took off a fifth here at about 5R, and then these are rough. I don't know if this is exactly the price points that I took them. Again, I'm just doing it roughly based off of my my trade journal here. But yeah, pretty much took that. Actually, this should be a little bit higher, so it should be like this. And there's one down here, and another one here. So those are the 5 partial TPs that I took, 20% each, which again ended up being about 8R or 8.6R roughly. That's what I have here in my calculation. So that's what I took out of it. Overall, a really good trade. If we do the math on that, I just want to give you guys an idea of, how profitable a trade like this is. We're just going to even do, a small risk on this to give you guys an idea. I'm going to be conservative about it. I typically like to risk 0.25% or 0.5% of a $100,000 account. So if we just do 0.25 in this scenario, I'll give you an idea of, we're risking $250 times 8.6R. Just made almost $2,200, $2,150 US in no longer than about an hour, right? An hour and 5 minutes, roughly. No, actually, sorry, about an hour and a half. So, if we risked, 0.5% of a $100,000 account, it's $500 risk. You'd be pocketing $4,000 in about an hour and a half and be done for the day, right? That's what somebody makes in, a month here in Canada, right? So obviously we're all in this game because it's a lucrative one, and if you're able to trade like this and analyze price action and break it down in this way, there are plenty of opportunities on the 5-minute. And again, I'm always an advocate for consistency, because overall, that's where you're gonna build your account up, not by trying to take super tiny stop losses and taking a lot of losses. It's not easy psychologically to deal with that. And I always tell people this. I always tell students, coaching call students this. You gotta focus on consistency, and you gotta, ideally, if you're new, you gotta focus on taking 5-minute equilibrium if that's something you want to do, right? Yeah, that's pretty much it. Thanks for watching, guys.